Welcome back to Mind Portfolio Lab. This is the next video in the individual EA overview series. In the previous videos, I looked at previous day level behavior, structure-based behavior, session behavior, confirmation-based behavior, and short-term momentum behavior. In this video, I'm moving on to another system in the portfolio, which I'm going to describe at a high level as a volatility band EA. Internally, this is the EA I refer to as BOLI. As always, I'm going to keep this deliberately high level. I will not be sharing source code, exact settings, exact entry rules, filters, stop logic, target logic, or trade management rules. The aim is not to give away the system or provide trade signals. The aim is to explain what role this EA plays in the wider portfolio, what type of behavior it is designed around, and what I monitor over time. At portfolio level, this EA gives me exposure to volatility band behavior. What I mean by that is that the system is interested in how price behaves around a wider volatility framework. It is not a simple fixed level strategy, and it is not a very short-term momentum system. It is designed around the way price stretches, expands, reacts, and follows through relative to a band-based structure. I am deliberately not going into the precise band logic or the exact trigger, because that is part of the system itself. But in broad terms, this EA gives the portfolio a different type of exposure from the systems already covered. That is important. Some of the other systems are more intraday. Some are more session-based. Some are more confirmation-led. This one has a different rhythm, because it can hold trades for longer and can benefit when larger movement develops. That also means the risk profile is different. A longer hold system can sometimes capture larger moves, but it can also be exposed to more market change while the trade is open. Overnight risk, weekend risk, news, gaps, and changing volatility can all matter more than they do with a very short hold system. So I do not think of this EA as better or worse because it holds longer. I think of it as a different component. The kind of conditions that may suit this system are markets where price moves clearly away from a normal range and continues far enough for the trade to develop. It can also suit periods where volatility expands in a cleaner way, rather than producing immediate reversals. Where it can struggle is when price stretches and then snaps back quickly. It can also struggle in messy range-bound conditions, or when volatility expands briefly but then collapses before the trade has done enough work. This is why I do not judge it trade by trade. A single winner does not prove the system. A single loss does not mean it is broken. The better question is whether, over time, the system still behaves in a way that matches its role. The uploaded backtest gives useful context, but I am not treating it as proof. In the uploaded test, the EA has 147 trades. The win rate is 36.73%. The average holding time is around 30 hours 31 minutes and 44 seconds, and the maximum holding time is around 939 hours. That tells me a lot about the character of the system. First, it is not a high win rate strategy. It needs the winners to do enough work when the market follows through. Second, it has a much longer average holding time than several of the other EAs in the portfolio. And third, the maximum holding time shows that some trades can stay open for a significant period. That is important from a portfolio perspective. If I have several EAs holding trades at the same time, I need to understand whether the exposure is genuinely diversified or whether the portfolio is becoming too concentrated. Longer holds can be very useful, but they need to be monitored carefully. For this EA, I am interested in whether the live behavior remains close to the tested profile. I want to see whether trades are still being taken in the type of conditions the system was designed for. I want to see whether drawdown remains within a sensible range. And I want to understand whether it is adding something different from the other systems. At portfolio level, the role of this EA is to add a volatility band component. It is different from the short-term momentum EA because it is not mainly about quick intraday movement. It is different from the session-based EA because it is not mainly about a defined trading window. And it is different from the previous day level EA because it is not simply reacting to one fixed daily reference point. Its role is to give the portfolio exposure to a different type of market behavior. That is the whole point of this series. I do not want a portfolio of EAs that all do the same thing with different names. I want each system to have a reason for being included. When I monitor this EA live, there are a few things I care about most. First, is it still taking the kind of volatility band trades I expect? Second, are longer holds behaving within a normal range for the system? Third, does live drawdown remain coherent with the tested profile? Fourth, are winners still large enough when the market follows through? And fifth, is it adding useful exposure without creating too much overlap with the rest of the portfolio? Those questions matter more than any individual trade outcome. So, to summarize, this EA is a volatility band component in the portfolio. It has a longer holding profile than several of the other systems, a lower win rate style, and a role that depends on larger moves doing enough work when conditions suit it. The backtest is encouraging, but I am not treating it as proof. I am using it to understand the system's character and to decide what I need to monitor live. For me, the important question is whether the system continues to behave live in a way that makes sense, and whether it adds a distinct contribution to the portfolio. This is not about finding one perfect EA. It is about building a portfolio where each system has a reason for being included. In the next video, I'll move on to another EA and go through the same process. What it is designed to capture, when it may perform better, when it may struggle, and why it belongs in the wider portfolio.